Hey everyone, welcome back to Upside Down Data. Today I want to talk about Algorand, some things we want to keep in mind as it tries to navigate this bear market, also some thoughts about its recent price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. There's a lot of updates about our indicators and more over there. So Algorand is an asset that has not been doing especially well recently. I think a lot of algo bulls have been quite disappointed with its price action from November all the way down to where we are right now. Really algo, if we just look kind of at its price action, is really round tripped from, December of 2020, went all the way up into this, high back here in November of 21, getting up close to $2.80, and then all the way back down we have come. And, this is not really something you'd like to see. Algorand has certainly, from this perspective, underperformed some other crypto assets, which are still well up off of their levels that they were back in the late 2020, Algorand coming all the way back down. But of course, that's just what's happened in the past. It doesn't necessarily mean that Algo is a bad project or that it's bad tech or anything like that. I think most people familiar with Algorand kind of recognize that it does have solid tech, has a solid team behind it. Now the question is just, will that matter? Will that be able to catapult it and let it sustain? Or is Algorand, already too far behind to really be able to stage a comeback? So let's talk about some indicators, some data that I think are useful to watch when we're trying to answer these questions about how can an asset perform going forward. So one of the metrics that I like to keep an eye on is DeFi adoption. So I'm on DeFi Llama right now, and you can look at different chains and what the total value locked basically is on the chains, how much money basically, and usually denominated in US dollars, is being locked up in DeFi protocols on the chain. So obviously Ethereum is number one, but then you have all the other kind of competing chains, the kind of the alt L1s who are trying to kind of vie for the, basically try to chip away from Ethereum's market share in a lot of ways, try to be a faster, better, cheaper version of Ethereum. Or not even necessarily a version of Ethereum, but just be a better competitor to Ethereum. And so Algorand currently sits down here at 21 in terms of total value locked, so right around 200 million, which isn't terrible. You'll notice that it's outcompeting some competitors, right? Elrond, for example, being another alt L1 trying to compete with basically be a more scalable, faster, cheaper chain than Ethereum, the smart contract compatible, that kind of stuff. Cardano, Algorand's also ahead of Cardano in total value locked, which is notable because Cardano has been for a long time a very notable altcoin. It's always been sitting in the higher ranks of market cap, but Algorand's actually ahead of that. And also Tezos currently quite a bit above that as well, also above Harmony, which has not been doing well ever since some of the hacks that they've had to deal with. But then obviously Algorand also isn't Avalanche, or it isn't Solana, or it isn't Phantom, or Binance Smart Chain, or any of those, which have quite a bit of value you can see locked up on them. So even though Algorand has good tech, it in theory could be locking up a lot of market share. It could be seeing more DeFi adoption. It hasn't really been outcompeting some of these other competitors, or for example Near up here. And so there's different ways of looking at this, right? One way of looking at it is that Algorand is just behind the eight ball, that it's kind of losing out to some of these competitors, and that's not a good thing. The other way of looking at it, though, also is that Algorand might just not be trying to compete in the same ecosystem in the same way, right? With Algorand, it didn't do what some of these other chains did early on. Like Avalanche, for example, was one of the first kind of alt L1s to put out a massive incentive program to really try to kind of bootstrap adoption of its platform for DeFi. Some of these other chains had similar initiatives. Algorand was kind of late to that party, wasn't really emphasizing DeFi adoption as much when some of these other chains really were, which could be why they kind of got the first mover advantage, really grabbed up a lot of the market share. Algo really has been focused maybe on other things. And one of the things I think about with Algorand is that it's really, it kind of is focused on other things to some degree, is my view of it. I mean, obviously they are trying to capture some of that DeFi space, some of that more what's kind of, they said that anything's traditional in crypto right now, the kind of quote unquote traditional usage of a L1 has largely been kind of NFTs and DeFi so far. Algorand's really trying to market itself, in my opinion, more towards enterprises, government, those kind of things, these kind of bigger picture plays to try to kind of get itself integrated into kind of the plumbing of some much larger things. And so from that perspective, they might just not be as focused on DeFi, which might be partly why they're kind of behind the 8 ball to some degree. So one of the things they have just front and center on their website is this commitment to sustainability, trying to be a carbon neutral blockchain. And probably one of the reasons why they're trying to push that is that's something that enterprises are going to care about. ESG is becoming a bigger and bigger thing. Being carbon neutral is an advantage, especially, proof of work Ethereum is nowhere near that. Is pretty, has a pretty big, large carbon footprint to it. So, that's one of the things that Algorand is just trying to sell itself on, is that it's this not only more scalable, faster, and all that, it's also carbon neutral. And you also can see some of this difference in focus as well, is that another thing kind of prominently on the Algorand website is them trying to kind of get into the central bank digital currency space, or to kind of try to convince, basically central banks that Algorand is a good platform if they want to launch a CBDC. Now, obviously, CBDCs are very controversial in the crypto space, with a lot of people really hating the idea and being really opposed to it. But again, there also are some people in the crypto space who look at an asset like Algorand and they see one of the long-term bull cases for Algorand being something like a CBDC being built on top of it. And, on the face of it, that does seem like a really good thing, that if you're getting some massive amount of just transaction volume being done on a chain, even if the transaction fees are really low on something like Algorand, just the sheer volume could really drive up demand for ALGO to pay for those transaction fees. Now, one thing I do want to note, though, that I think is important to note with the CBDC kind of debate that I don't see people talking about enough when they're talking about it as a bull case, is that one of the things that I think could very easily happen with the CBDC is that they take the technology of Algorand and just go make their own fork, their own side chain that might be permissioned, for example, to give them greater control. Who knows? But I think it's a decent probability that any CBDC that would get made with Algorand would not actually be running on the Algorand public network. It would actually probably be their own chain that they would create that might use the tech underlying Algorand, but it might actually not be the same thing as the public network. And that's something that people don't really talk about so much, but I just wanted to bring that forward, that just if you see a CBDC working with Algorand doesn't mean it's necessarily going to launch on the Algorand blockchain as we know it. It might be a fork, and that would then not bring all of that financial kind of benefit to the Algorand public network, would not necessarily help the price of ALGO, the token. So just something to keep in mind with that. When you see people running around talking about CBDCs as being this thing that's going to take ALGO to the moon, there's a caveat, there's an asterisk, maybe if they were actually to launch it on the public network, and that's a big if in my personal opinion. So when we think about these kind of more kind of big macro pictures, I think with Algorand, a lot yet remains to be seen from this perspective. I think if they can get a lot of usage by enterprises or by governments for other various things, especially if there's a need, less so than a CBDC, but if there's a need for something that's more kind of cross-country decentralization, that would need a blockchain underlying it, and if Algorand can start to suck up some of that market share, then I do think that could be reasonable. But I think it's just important to note with a chain like Algorand, though, if that is the long-term bull thesis that one has about Algorand, it's very speculative, right? We don't really know if this is going to happen, if this is going to succeed. And certainly Algorand has not been, sitting at the top of some of the more traditional metrics that we look at that gives value to layer 1 blockchains right now. So for me, kind of the way I look at Algorand is it has a lot of potential, but I think it has a lot to prove before it really necessarily might kind of warrant that a whole lot of confidence in that long-term bullish thesis. I think Algorand really needs to prove a lot. I think it certainly could live up to that promise, but will it, I think, is still a big question we have to ask. Now, to kind of wrap us up, I also mentioned I wanted to give just some thoughts about more recent price action. So with that, I want to switch over to some of our models we have here at the channel, just to say what they're looking at and some kind of what we can glean about its more recent price action of where we might expect it to go from here. So kind of taking it from that more macro view to a little bit more of a shorter term perspective. So I first want to show you the medium term UDPI. So the UDPIs are risk models. So 5 is high risk, -5 is low risk. And this is the medium term, as I mentioned, that cares about moves that play out over weeks to months. So a little bit more short term. Medium term in its focus, kind of as the name implies. So we also have a short term version of the model, cares about moves that play out over days to weeks, and also a long term that's more months to multiple months. But this is kind of in the middle. That's why I wanted to show it as it kind of sits in between. As you can see, it does a good job of quantifying these high risk points and these low risk points in ALGO's history. And we can see that if we just look at the raw output of the model and then have in the yellow here the ALGO price plotted in the background. And so you can see, that it peaks up at around these topping points, saying, just start distributing around here, start acquiring right here, etc. And you'll notice that, we've come down, we've had some volatility, in the risk, reacting to some of these shorter term moves, but we've come all the way down to basically the lowest level that we've been at. Really the only time we've been down here in the past is basically back, falling shortly after the March 2020 crash. That risk got all the way down here, kind of signaling at this time this generational buying opportunity for algo before we went shooting off, to the moon. I think it was about a 2,700% move to the upside to the absolute top back here in November of 21. And we're back down there again. Now, time will tell if this ends up being another generational buying opportunity like it was back here, but certainly we're at the same risk level, and we've just been leaving, we were just at this risk level, and we've slowly been starting to move up as prices started to appreciate again as well. But importantly, there is still quite a bit of room to run to the upside should algo decide to do that, right? And I think algo is really going to be dependent on what the rest of the market does. So if Bitcoin continues to rally, if the macro conditions continue to rally, the stock market continues to rally, all that stuff keeps lining up, I think then we could see algo continue to run. And, for the medium term, the model thinks there's a decent amount of room it could continue to move. Now, I personally would start getting more and more concerned if we can start breaking up into the positive territory here, just because we are still very much in a bearish footing. And so should we start getting up closer to 0 and especially 1 and above, I start really questioning if that rally could continue. But, should algo want to run, there's quite a bit of room it could move, in my opinion, and it might move it back up to some of these price levels that we saw, kind of back over here a little bit several months ago, more or less. Now, another model we can consult is the market direction classifier, or MDC, which is one of our trend indicators that we have here on the channel. So if you're not familiar, basically just assesses the asset's price action and creates a critical level at which, if the asset's above that level, it's bullish. Below that level, it is bearish. And you can see it's a dynamic level that kind of adjusts over time. And, generally speaking, it does a pretty good job of basically getting you out before disaster strikes, right? If you've been trading based on this model, you would have gotten in here, and granted, you wouldn't have necessarily been selling here based on this model exclusively, but you would have been making a profit and avoiding this big capitulation that we saw back in March 2020. But then you would have been in for the meat of this move. You would have caught this entire parabolic move. You would have caught the main part of this big move here, and then more importantly, recently, you would have been sitting out these massive dumps. And even if you would have gotten back in here, you would have gotten right back out again. So one of the things I like about this model is that it can help to manage risk. So, something like the UDPI, in my opinion, can be a little bit more helpful in identifying these kind of local top kind of points, like these kind of points here of distribution. But then, if you miss your exits here, watching the MDC can get you out before the extreme pain comes in. And even if you just merely trade on the MDC, you're still going to see quite a bit of profit coming into you, and you're going to be avoiding a lot of the down. And so you're probably going to be pretty happy regardless, even if you're not, capturing the absolute bottom or absolute top, which again, I think is usually ultimately very difficult to do. So I think this model is just good to kind of help kind of manage risk and to identify broadly the trend that we're in. Are we in a downtrend or are we in an uptrend? And you can see that we're flipped green, right? We flipped green back, we've been kind of flirting with a critical level for a little bit here, and now we're kind of more decisively up in the green where we are. So the MDC is currently watching 33 cents as being its critical level, and we're still trading above that. So from its perspective, as long as we stay above 33 cents, it's going to stay more bullish than bearish on algo. So it still thinks that algo is it still thinks a bullish outlook on algo right now makes more sense than a bearish outlook. But again, if we lose the critical level, that would change. So kind of when we look at our more recent kind of action, if we just go back over here to the price chart, what it basically is saying is that algo, after this horrible downtrend we've been in, is poised for some uptrend if broader market conditions allow. And so, we can also look at the volume profile here for algo to identify that if we do rally, where are some places we might kind of bump our head. And really, if we look at it, getting up closer to the 70-cent level, kind of back up here, is really maybe the next level we'd look. If we can clear back up through this kind of next little leg of volume that transacted back here going up to around 50 cents, then it's really up to about 70 cents. That might be the target. And that's where I personally expect the top to be of any kind of shorter term rally we end up seeing here. I don't think that crypto markets are just going to go ripping to all-time highs immediately. I think more likely if we get a more extended rally, that would be a target to look at before maybe having to consolidate, before maybe be able to move back up again, should there be a broader, more of a bullish reversal across markets forming. So we'll see what happens, right? We're currently trading, down here at around 32 cents. We're actually, if we were to close down here, we might actually flip bearish on the MDC, but if we close above, we'll still be bullish. So something to actually watch in the short term there. But overall, I think that if the broader markets allow, I think, Algo could have some room to move to the upside. But for right now, we're going to have to wait and see. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. We'll have updates about indicators and more over there.